Jay Ratliff, Day Trade Fund, talking about the regional banking crisis. Is it over? A lot of us were very caught off guard is probably the best way to put it after the couple of weeks in March of 2023 when we had some regional banks that started to falter. In fact, we had some of them collapse. We had Silicon Valley Bank that collapsed in a matter of hours because of the fact that you had people that had customers that were able to rip their money out of that account electronically, immediately, and before the bank really had a chance to respond. So what ended up taking place was that we had a bank collapse, and more importantly, and certainly more notably, the fear in the overall financial industry started to shake. We saw the market volatility, the fear index, which I'll talk about in another video, actually started to rise, considerably so. In short, people are starting to freak out. They're thinking, my gosh, is my money in the bank really safe? And maybe I should look at pulling it out. We had banks that were solid banks that were dropping in a single day as much as 30 to 35%. I can tell you, from a day trading, flip your stock kind of perspective, it was a target-rich environment because the fear was feeding all this market volatility and was making it a time when obviously emotion had taken over the car and was driving it over the cliff. It was amazing to see some of these solid companies dropping as far as they did on no company-specific news. Now, I can tell you during the banking crisis financial crisis in 2008, I'd been trading stocks for about 15 years at that point in time. And when that hit in that September, October, and November, the emotion was at an unfettered high at that point in time. With the fear index over 80, 85, the market was in an absolute state of meltdown for a few days. And what we had was a period of time when a lot of stocks were going on sale because of the fact that this fear was here. Well, now we're in 2023, and we have a lot of individuals that are pointing and saying the regional banking crisis is over. We had a few banks that failed, and we really have nothing to worry about. I do not agree, and here's why. Regional banks have a different set of rules, if you will, from the standpoint of how much risk that they can take on versus a larger bank, which makes no sense, but that's how the banking industry works many times. So as a result, what happens is that as interest rates rise, and of course the Fed recently announced a 25 basis point further increase on top of all the other increases, with each one of those, it makes it more and more difficult for these regional banks to make a profit. It eats away at that margin that they need desperately so to turn a profit. So as the interest rates continue to go high, it becomes more and more difficult for regional banks. Well, that's just business. But that's not my biggest worry. My biggest worry is that we're seeing right now in corporate real estate, a lot of these buildings that are sitting empty. Kastle Systems, that's a KASTLE, they issue a report that shows the vacancy rate of these corporate buildings across the country. So what happens is we're getting reports every week that show the buildings are 48% empty, 55% empty, 60% empty in some places. And of course, there are corporations that own those buildings. They have the lease or the payments on them. And some of those businesses are going to go out of business. They're not going to be able to make the payments for these buildings because they simply don't have the revenue coming in that's going to allow them to pay for those loans. We're seeing a corporate real estate meltdown that's going to happen over the course of the next several months. And who holds a lot of that paper? Who are the organizations that have lent the money to a lot of these corporate mortgage holders, if you will? And it comes right down to the regional banks. So at a time when we have the interest rates increasing, and at a time when we are seeing more and more pressure from a default standpoint on loans, folks, you're talking about the perfect storm for what's going to take place. Now, am I saying that the economy is going to collapse, all hope is lost? Obviously, no. But here's what's going to take place, and we see it all the time. We saw this in the 1980s in Ohio with some of the savings and loan where they were very solid, but the problem was you had a lot of people scared to death that their money was at risk. And the government had to actually shut down some of the savings and loans to prevent a run on the bank. Well, I'm sorry, these days with us being able to type to get our money in and out of accounts, you can't stop people that want to transfer money in or out of their account. So I think what could happen, and this is going to be a little bit of a speculation on my part, but it's based on things I've seen in the past. We could see another round like we did in March, where there's a lot of banking issues where we start to see some of these regional banks start to suffer and fail. Now, there is work on the sidelines that's being done right now to try to come up with a different approach to give these regional banks a higher bar, if you will, where they would have to meet certain level of criteria to be able to assume additional risk. Well, that's good, but it's years down the road before it's going to be implemented. I'm worried about this year, later this year, and as far as what's going to take place. So if we start to see a few more of these regional banks start to falter, and a recent report showed that 576 regional banks were under pressure. 576 regional banks are under pressure. Not that they're going to fail, but they're coming under increased pressure. And there's a growing amount of concern on how these banks are going to respond to that twofold attack of higher interest rates and a big time drop in the corporate mortgage side of things as that sector starts to collapse. We've already seen it a little bit. Doesn't take a genius to see it. Coming out of the pandemic with all those office buildings empty, a lot of people swooped in and said, hey, this is a great time to pick up some commercial real estate. Add it to my portfolio. As the economy recovers, people will flock back to work. The businesses will flourish. And look, I just was able to snag an office building or a series of them at a significantly reduced cost. Well, now those investors are finding out that, whoops, things aren't really bouncing back. We're not seeing people return to work as they used to. In fact, many of them are taking quality of life over more money. Case in point, United Airlines. They are seeing their first officers turn down promotions. They don't want to be captains. They don't want to make more money because they say, I'd rather be a top first officer from a seniority standpoint where I can call the shots, be home when I want to be home, take the routes I want to do, than be a junior captain. So they're seeing more and more and more of them say no. I can tell you, folks, after 20-some years in the airline industry, that's unheard of, but that's the environment that we live in. That's why when I look at these corporate office buildings with a lot of these people saying, oh, the people will come back, they may not. So what's going to take place is if the regional banks start to falter and we start to see some of these banks fail, you're going to see round two of what we saw in March, but it's going to be a lot worse. Because now people are already thinking about what happened in March and say, you know, there could be some serious issues here with some of these regional banks, and it's going to affect every bank in the financial industry. That's why, to me, it's going to be very, very critical moving forward to be very cautious about what money you put in the stock market. Now, I'm not going to say the stock market's going to crash, but we could see another dip, another correction. The market could drop 10 or 15, even 20% or more from this pressure that's being applied by concern over the financial industry. Now, will the financial industry be as hammered and as hurting as it was in 2008? Not even close. But what we are seeing is the fear of what could take place could take over. And fear is always what drives the market down. Greed is always what drives the market up. And when people panic, believe me, you're going to see unbelievable things happening on Wall Street. That's one of the reasons I like our catch and release program at Day Trade Fund. We'll grab a stock, hold it for a few minutes, sell it for a 5 or 10% gain, and be done with it before the end of the day, because holding a stock over, especially in what could be some very volatile times to come, is, not the option that I would prefer to take. So be very, very prepared, and please don't join the group of individuals that are casually dismissing this regional banking issue as something that happened in the past. It's not going to be a problem. I'm not really worried about it. No, keep a very sharp eye out. I'm not allocating that you change any of your investments or anything at this point in time. My point is to understand what could happen within the financial industry and to be prepared. It could create some incredible financial opportunities for individuals that are patient, like the Warren Buffetts and others, that have cash on the sidelines, who aren't rushing in right now buying stocks at all-time highs. They're just saying, you know what? I'll wait for some of these stocks to go on sale. I'll wait for some of these stocks to drop in price. They have predetermined entry points on any stock they're looking at. And when the stock gets there at a significant discount from where it's at now, automatically they know to jump in and buy their shares and go from there. Please be prepared and be aware, because this regional banking crisis is far from over.